56 trades somewhere in this area here. Mark it off. Start looking. Start getting ready. Doesn't mean it's going to exist, but you now know that this is going to be the possible play just in here.
And as if by magic, there you go, Mike. I think that was drawn to perfection.
So you can see we popped on a little buy trade there just at that price there at 60. So we were using the 60 as the liquidity level. This is a 15-minute chart, not a 15-second, but you get the idea that it's the same trade. So we bought into this at 60 there. We managed to get the right trade at the right price, just getting that little bag of liquidity, waiting for the transition at that stage. The value, which was against us, so I wasn't taking the early 56. The value is now in my favor, so I take the 56 trade there at 60. See it? See how beautiful that trade is? The target price, of course, to try and get into this target price here at 63. Is that not a good bit of business? What do you think? You see how you could use this for your funded trader accounts to find some really, really easy trade entries? My drawdown in that trade was 0. Literally bid offer spread stuff. And I've been able to take a little trade, and it's not a big trade, I'm not claiming it is, but we've taken a 60 long up to 62, 63s. But, you know, this is the same kind of idea as a 74 sell that traded 60. We don't know which one's the one that's going to be the one, because there wasn't a lot of accumulation here. So, I mean, this is early diddles into a big, possibly a big accumulation. But if we keep giving ourselves that patience, if we keep reminding ourselves that we're allowed to be patient because we have the ability to deal when it happens, then we can obviously start getting ready for this trade. well in advance. That's the main thing. Not every trade's going to pop a big one. That 56 short popped a big one. This is the wrong time of the day to pop a big trade into this. Now, obviously, the next thing that's going to happen is we're going to get the London close. So we would imagine that this session is going to start building liquidity here. So I'm expecting this to build. I'm expecting to maybe do 2 or 3 of these 56 buy trades as a buyer. If the value flips, if the value develops, if the value reverses out, I'm expecting to see this. I'm watching the volatility prices, which were against me here. I'm watching the storylines evolve. I'm watching the correlations. I'm watching the transitions. I'm watching the various book liquidities. And there's not an awful lot telling me to go for this buy trade just yet. And yet I still was able to make money just because 1 out of 3 of my lines was giving me a bit of value. So I don't have to just be a buyer because of this. I'm not buying this one. This is not going to be a buy trade. So I'm going to wait for the next liquidity to develop. So obviously I'm now going to be looking at this from the point of view of what? We've got the next liquidity. What am I now looking for? I want to see the buyers still want to come in here, right? So I've now got this buyers at higher prices. Okay, so I'm ready for the buyer at higher prices. And if we then go back up to this area, I'll be looking to bid back in at 59s again. Do you understand that? Is that making sense, guys? So I am not trying to catch this as a prop desk trader or as a funded trader. I'm not trying to catch the bottom edges. Leave that for the commercials. All I'm doing is when they've done the hard work at the bottom edges, send in Lawrence Taylor to take on those tired linemen, and you're going to get your sack and the fumble and the recovery at that stage, yeah? And if they keep going after liquidity, guess what, guys? No trade, right? See how glorious that process is? No rush, no issues. Just let them go lower. Let them run the liquidity. But when you get your trade ready to go, you get ready to go. When you're about to send in LT, you know you're going to go for the big play. You're going to go for the sack. You're going to go for that fumble recovery. So when you're looking at this, you're just letting it work. You know, and it might not. You might not get the opportunity. They might be able to take this price and just ride it north. And that's it, done and dusted. So let's see if it does come out with another trade opportunity. Well, remember, that's absolutely right, Sam, because in the background to every market, we still have that volatility storyline. I mean, that's what we talked about yesterday, isn't it? We still have that volatility storyline that we can then look for as a possible piece of additional information. We've still got the dealer levels, of course, that we can look for a possible piece of information as well. You know, and if we've got the dealer levels and we've got that storyline and everything ties up, well, guess what? We're going to make a lot of monies, aren't we? We love the monies. Everybody loves the monies.